Greetings, traders. I hope you had a great long weekend and enjoyed celebrating Martin Luther King Jr. Day. I didn't post my analysis on Sunday as I usually do because I wanted to see how the market would open on Monday. And surprisingly, we opened with a gap down. How this develops throughout the week will be very interesting to watch. Let's start by looking at this week's major economic events. On Thursday, we'll get GDP data along with PCE inflation numbers, followed by consumer sentiment data on Friday. Other than that, the rest of the week is relatively light in terms of major economic releases. GDP is especially important because it will give us a strong clue about what the Federal Reserve may do next. This week is also packed with key earnings reports. We have Netflix reporting on Tuesday, Intel on Thursday, and earnings from several banks, including First National Bank and Capital One. I'm particularly curious about Intel's earnings, especially after the stock surge following its breakout above the 25 level. Now, let's move to the technical side. The Nasdaq started the week with a gap down and dipped into its support zone around 25,326. While it managed to recover some of those losses, it's still hovering dangerously close to that support area. If Nasdaq breaks below this level, that same support could quickly turn into resistance. There's a high probability that Nasdaq remains range-bound between 25,869 and 25,326. However, keep a close eye on a potential retest of the previous support near 24,878 if selling pressure increases. The S&P 500 also opened with a gap down, and this gap was more significant compared to Nasdaq. It dipped into its support zone after breaking below 6,901, but impressively recovered almost all of today's losses. For now, I don't expect S&P 500 to break out of the 6,901 to 7,001 range. Looking at the dollar index, it had a fantastic week overall, but opened lower on Monday. This move actually supports the recovery we're seeing in Nasdaq and S&P 500. The drop in the dollar has been quite significant and is continuing at the time of this recording. If the market reacts positively to GDP data, the dollar index could retest 98.65 and even 98.30. Lastly, let's talk about Bitcoin. Bitcoin performed well last week after breaking above the 94,678 resistance, but couldn't hold that momentum to push higher. Don't be disappointed. This is still healthy price action. As long as Bitcoin holds around this 94,678 support turn resistance level, it remains in good shape and could gradually move higher toward the 100,000 level. That said, a pullback toward 87,800 is still possible. That's all for now. Trade safe, manage your risk, and I'll see you next week.